if you're finding yourself lacking money in your business, as far as like money's that you're always stressed out. You're always stressed out about money, right? You're paying yourself what's left over. Nothing's going the direction that you wanted to. Everybody seems to get paid before you do. You feel like you end up working just for the government and for your employees and for payroll, and there's nothing left for you, and that's it. Well, there's two things you got to consider. One, either your pricing is way out. You might not be charging what you should be charging. Your margins could be completely off. That's the first place I start to look, is I start to dig into what are my actual expenses per month based upon what are my costs per month, based upon my revenue, and is my percentages all in line? Are my cost of goods percentages in line? Is my expense percentages in line? And is my net profit percentage in line? And by the way, if you're doing that, you can't officially calculate net profit percent unless you've paid yourself a fair market salary for the work that you do. So if you're not able to make it there, then okay, well, what revenue do you have to hit to be able to make all your percentages work so you can become profitable? And that could be, maybe you got to add 25% to your revenue. Maybe you legitimately just have to increase your prices by 15 to 20%, despite all the fear it's going to cause you to make it to where you need to be. The second thing you have to look at is your cash flow. You could be starving for capital simply because people aren't paying you when they're supposed to. And you could be cash strapped, meaning your business is profitable, but it's your cash flow that's tying everything up. There's ways to fix cash flow challenges, and some very simple ones. One, there's third-party companies that will buy your receivables. Now that sounds expensive, right? They'll buy my receivables from me and pay me. Well, yeah, and a lot of them aren't unreasonable in their rates. So if you have a line of credit, most lines of credits run between 5 and 8%, sometimes a little bit higher. And these companies that buy receivables will buy them at a 5% rate. So if somebody owes you 100 grand, they'll buy the receivable from you for basically 95, and they keep the 5%. And they'll pay you 25% of that capital up front, and they'll pay you the remaining 20% when they get paid, which is a great system. Two, it could be your policies. What are your policies around cash flow? Are you collecting deposits when you need to collect deposits? Are you collecting progress payments when you need to be collecting progress payments? Are you negotiating with your vendors to make sure that you've got proper payment terms in there so you're not required to pay for everything up front, but maybe you can extend your payment terms to 45 or 90 days depending on when you sell your product or service? So again, if you're cash strapped, two things to look at. One, pricing. Is my pricing on point to match what I need? Or do I have to cut some expenses to make sure that my pricing falls in line? Two, it's going to come down to cash flow. Am I getting paid when I need to get paid? And realistically, there's only one way to know that answer. You have to freaking track it. You can't rely on your bookkeeper to tell you. You have to know how to understand your numbers so you can interpret what your bookkeeper is telling you, so you know where the stuff has to lie. And by the way, it's not your bookkeeper's job to know your numbers, and it's not your accountant's job to know your numbers. It's your job to know your numbers and how to interpret those. And realistically, understanding and interpreting the numbers is easy if you have the right tools. It's really hard if you have the wrong ones. And most accounting software is the wrong tools. Just saying. They're designed for taxes and not designed for your operations. So check out those two things. Check your pricing, check your cash flow. Until next time.